Well, folks, welcome back to Boss Economics World, where we take the economic dumpster fires of the world, douse them in satire, and light a match just to see how big the explosion gets. I'm your host, the guy who reads central bank reports so you don't have to, and today, oh boy, do we have a doozy. Grab your popcorn, your pitchforks, and maybe a stress ball, because we're diving headfirst into the latest economic circus act straight out of Washington D.C. That's right, President Donald Trump is back at it, summoning the titans of Wall Street to the White House like some kind of economic Avengers assemble, and the topic du jour. Fannie Mae and Freddie Mac, those mortgage behemoths that have been on government life support since the 2008 financial crisis. But here's the kicker, folks, Trump's not just talking about fixing them, he's talking about cashing in. Oh yeah, we're talking IPOs, big bank paydays, and a whole lot of economic chaos waiting in the wings. So, buckle up, because this is gonna be a wild ride. Now, for those of you who've been living under a rock, or, let's be honest, just trying to survive the latest inflation spike, let me break this down for you. Fannie Mae and Freddie Mac, officially known as the Federal National Mortgage Association and the Federal Home Loan Mortgage Corporation, are the twin pillars of the U.S. housing market. These government-sponsored enterprises, or GSEs, basically exist to make sure you and I can get a mortgage without selling our kidneys on the black market. They do this by buying up mortgages from lenders, packaging them into securities, and selling them to investors, all while keeping the housing market humming along. Sounds great, right? Well, hold your applause, because back in 2008, these two giants got a little too big for their britches, gorged themselves on risky subprime mortgages, and, boom, crashed the global economy faster than you can say, credit default swap. Since then, they've been under government conservatorship, which is a fancy way of saying Uncle Sam has been babysitting them for the past 17 years. And guess what? They've been raking in profits that, until now, have been funneled straight back to the U.S. Treasury. But enter stage right, Donald Trump, with a plan to take these bad boys public, cash out, and let Wall Street feast on the leftovers. Oh, and did I mention the banks could make a killing in fees? Because of course they could. Now, let's talk about what's really going on here, folks, because this isn't just about fixing a broken system, it's about who gets rich and who gets screwed. Trump's been meeting one-on-one with the biggest names in banking, Jamie Dimon from J.P. Morgan Chase, David Solomon from Goldman Sachs, Brian Moynihan from Bank of America, and rumor has it, more are on the way. And what's on the table? A massive public offering of Fannie and Freddie stock, potentially one of the biggest IPOs in history. We're talking billions in fees for the banks lucky enough to underwrite this deal, and a potential $206 billion windfall for the government, according to a recent Congressional Budget Office report. Sounds like a win-win, right? Wrong. Because, as always, the devil's in the details, and those details are about as clear as a fogged-up windshield in a blizzard. So, let's peel back the layers of this economic onion and see what's really stinking up the joint. First up, let's talk about privatization, baby. Trump's big idea is to take Fannie and Freddie out of government conservatorship and let them loose on the free market. Now, on the surface, this sounds like classic conservative economics, less government, more private sector, yada yada yada. But hold up. Who actually benefits from this? Spoiler alert, it's not you, me, or the guy down the street trying to buy his first home. Nope, the real winners here are the hedge funds, private equity firms, and Wall Street banks who've been salivating over this deal for years. See, ever since Fannie and Freddie went into conservatorship, their stocks have been trading on the pink sheets, basically the Wild West of the stock market. Hedge funds have been gobbling up these shares on the cheap, betting on the day the government would finally let go. And now, with Trump dangling the IPO carrot, those bets could pay off big time. We're talking windfalls in the tens of billions for investors, not to mention the underwriting fees for banks, fees that could easily top $1 billion, according to estimates from Bloomberg. Meanwhile, what do regular folks get? Higher mortgage costs, less affordable housing, and a housing market that's even more beholden to Wall Street's whims. Sounds like a great deal, if you're a hedge fund manager. And let's not forget the latest data, folks. According to a 2024 report from the Urban Institute, hedge funds and other institutional investors now own over 40% of Fannie and Freddie's outstanding shares, up from just 15% a decade ago. These are the same folks who brought you the 2008 financial crisis, and now they're licking their chops at the chance to cash in on the housing market, again. Meanwhile, the average American is already struggling to afford a home, with median home prices hitting $426,900 in June 2025, according to the National Association of Realtors, and mortgage rates hovering around 6.8%, per Freddie Mac's latest data. So, tell me, how exactly does privatizing Fannie and Freddie make housing more affordable? Spoiler alert, it doesn't. Oh, but wait, there's more. Let's talk about affordable housing, or, as I like to call it, the unicorn of the American dream. See, one of the big reasons Fannie and Freddie exist is to make sure low and middle income folks can actually afford a mortgage. They do this by guaranteeing loans, which keeps interest rates low and ensures lenders don't run for the hills when someone with a less than perfect credit score applies for a loan. But here's the rub: if you privatize these bad boys, that mission goes out the window faster than a politician's promises after election day. Why? Because private companies don't care about affordable housing, they care about profits. And profits don't come from lending to folks who can barely scrape together a down payment. They come from lending to the wealthy, the creditworthy, and the already privileged. Don't believe me? Just look at the data. A 2023 study by the Federal Housing Finance Agency found that under conservatorship, Fannie and Freddie supported over 60% of mortgages for low and moderate income borrowers. But in a privatized world, analysts at Moody's predict that number could drop to as low as 30%, as private investors push for higher returns and less risk. So, congratulations, America, your dream of homeownership just got a whole lot dreamier, and a whole lot less likely. But wait, folks, it gets even better. Let's talk about systemic risk, because nothing says fun like the potential for another global financial meltdown. See, one of the reasons Fannie and Freddie were put into conservatorship in the first place was because they were deemed too big to fail. These two companies backstop over $7 trillion in mortgage debt, yes, trillion with a T, according to the latest FHFA data. That's more than half of all U.S. mortgages. So, what happens if we privatize them, let Wall Street run the show, and then, oops, another housing bubble pops? I'll give you a hint, it rhymes with 2008 financial crisis. And here's the kicker: the Congressional Budget Office's latest report, released just last week, says the government could only make that $206 billion windfall if Fannie and Freddie are put into receivership, basically, if they're wound down and dismantled. But if they're privatized and left to their own devices, the risk of another bailout looms large. Just look at the numbers. A 2024 stress test by the Federal Reserve found that a severe economic downturn could lead to losses of up to $150 billion for Fannie and Freddie, losses that taxpayers would likely have to cover, again. So, tell me, folks, is this really about fixing the housing market, or is it about rolling the dice on another Wall Street casino game? And finally, let's talk politics, because nothing screams economic reform like a good old-fashioned Washington gridlock. See, the idea of privatizing Fannie and Freddie isn't new. Policymakers have been kicking this can down the road for years, and for good reason. Every time someone tries to overhaul the housing finance system, they run into the same problem: no one can agree on how to do it without screwing over homeowners, taxpayers, or Wall Street. Shocking, I know. Just look at the latest attempt. In 2023, a bipartisan Senate bill to reform Fannie and Freddie died a quiet death in committee, thanks to concerns about rising mortgage costs and the impact on affordable housing. And now, with Trump pushing for privatization, the battle lines are drawn once again. On one side, you've got the free market cheerleaders who want the government out of the housing business entirely. On the other, you've got housing advocates and consumer groups who say privatization will make homeownership a privilege for the wealthy. And in the middle, a whole lot of political posturing and not a whole lot of solutions. So, tell me, folks, what are the odds this actually gets done? I'll give you a hint: they're about as good as me winning the lottery, twice, in the same week. So, there you have it, folks, the latest chapter in the never-ending saga of Fannie Mae and Freddie Mac, brought to you by the one and only Donald Trump. Will this plan fix the housing market, or will it just line the pockets of Wall Street while leaving the rest of us holding the bag? If history is any guide, I think we all know the answer. But hey, at least we'll get a front row seat to the chaos, right? And who knows, maybe this time, the economic gods will smile on us, and we'll all get a piece of the IPO pie. Yeah, and maybe pigs will fly, and I'll be the next Fed chairman. Dream big, folks. That's all for today's episode of Boss Economics World, where we turn economic disasters into comedy gold. Be sure to like, subscribe, and ring that bell, because trust me, you don't want to miss the next train wreck. Until then, keep your wallets close and your skepticism closer. See you next time.